What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only SPY, the Nasdaq, the QQQs, and the futures. Break down what the charts are telling us and why tomorrow is going to be absolutely mad. It's going to be a crazy, crazy day. I want to break down what's coming out that's going to cause that, what the market makers are doing, and why the market is moving the way it is. Now, before I break anything down, though, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each valued at up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer runs in just 13 days. Make sure you sign up before they run out. With that out of the way, let's get on with the video. So SPY is up 0.32% for the day, and today was wild. It was crazy. I'm going to break down why tomorrow is also going to be just as crazy, if not crazier, in my opinion. So to start us off, we had this right here. We had some very big earnings that came out. We had Roblox that did pretty well. So did Roku, and I think Shopify was just okay. It came a little bit down in the after hours, but that doesn't matter too much. Thursday, we have some big earnings. We have Paramount, DoorDash in the after hours, and a bunch of other companies, not to mention even more by Friday. But the first thing is, yes, we have some big earnings for Thursday. Then on top of that, we have huge economic data coming out. We have PPI coming out. This is like CPI except from the producer side. All right, the consensus is a 0.4% increase, right? We are expecting it to go up a little bit month over month. Core PPI up 0.3%. Initial jobless claims is also coming out, and they're all coming out an hour before the market opens. Jobless claims are expected to be 200,000. All right, we want this to be a little bit high. At least typically that's what the market would want. The market wants that to technically happen to help slow down inflation. Then we also have more and more data coming out from the Fed, followed by more speakers. We have Fed Mester, we have Fed Bullard, we have Fed Cook, we have even more speakers throughout the day. So we have a bunch of Fed speakers. We have important economic data involving housing and etc. The bigger things are going to be then jobless claims in the morning and PPI, which is almost as big as CPI, not as big, but almost as big. It's like CPI from the producer side, right? Super, super important day tomorrow. A bunch of data, a bunch of earnings, and on top of that, don't forget about the market makers. All right. When it comes to the options chain, we are seeing a bunch of calls and a bunch of puts, but for tomorrow, max pain's at like 413. Tomorrow does not have as many, so we might not see the market makers go as crazy as they did today. But notice how they tried so hard to bring the market up. They were trying to cause lots of pain for the shorts, keeping it above max pain. But don't forget that for Friday, we have over 3 million puts out of the money, which means that a lot of the bears are going to try to drag the market down. Big institutions are going to start selling. And the problem is when they start selling, the market makers are starting to buy it all up. Why? Because the market makers are trying to push the market up. Why are they doing that? To cause pain for the shorts, to squeeze the shorts out of their positions, to destroy the shorts. They're going to make a lot of money if they do that. It works in their favor with the high put to call ratios, with so many people buying into the put side. That's why it's going to be very important. So, with that said, I want to now break this down, what's happening with the charts. In my opinion, okay, I want to note I can't predict everything because this is going to be heavily dependent on data and how the data is used for the intentions of these market makers and institutions, right? If CPI is like high, for example, they might just pump the markets anyways. Just like how CPI was a little high, the market still managed to pump, which is crazy. And at the same time, if it comes in low, they could try doing the same thing. I mean, it's just insane. Or they could just start shorting the market down. It depends on what they want to do. They're just using PPI and all the data as an excuse. But the bottom line is, from a technical standpoint, I'm just going to break down the technical aspect of this. If SPY is bullish, we're going to break above the resistance right over here, which is where this line is. I'm going to change the color of it so it's a little easier to like differentiate. Let's make it orange. I think orange would be a little easier to see. Yeah. All right. So if we're going to be bullish, we got to break out of this orange line. Retest 415. Strong resistance there. If we break it, 416 will come. That's the way more bullish possibility. The setup looks more bullish. If we're bearish, we're going to come down to this 412 area. There's some support there, not super strong though. And the stronger support is going to be right here around this 410 zone. If we break below 410, then there's 408 followed by 405. Make sure you watch all these levels. I really can't predict it perfectly because it depends on the data. I want to make that clear. But if I could give you guys my 2 cents, what I think could end up happening is I think we might kind of gap down in the morning, maybe trade a little sideways, so we might get another push later on. And we might try to push back to like 415 to 416. I don't know how much more steam the market makers have to push the market up again. The buyers seem exhausted to some degree, but this setup does look like we're making these higher lows, and it looks like it's going to try to get a push up again. Now, there was an instance where this happened, and we ended up getting a rejection. And because we've been pumping for the last 2 days, or last day and a half, there is a good chance we're going to try to pump up again, maybe get to 415, 416, then get a rejection and come right back down and chop back and forth. We could close pretty flat again, right? That's also very possible. Don't forget, max pain for tomorrow is around 413. It could change, but that's what I'm seeing from tomorrow. Sorry, and then for Tesla, same thing. Overall, if we're bullish, we have to break 215. If it breaks 215, it's going to fly to 220. I think it could do that. If it breaks 220, the resistance is not as strong there. The strong resistance is going to be around 224 now because that's where the 200 moving average is. If we're bearish on Tesla, I'm seeing this coming down to 209, then 205, then 200 flat. What do I think is going to happen? It's very hard to predict. You could argue that we have a bullish setup. Depends on the data. I do think that Tesla might actually get a bit of a rejection. It is kind of overbought. It might try, maybe temporarily break this and then come right back down and kind of chop around between 209 and 215. I am seeing something like that. For Microsoft, this thing is either, in my opinion, we have two possibilities. If it breaks below the trend line right here and gets a clean break, it doesn't like get bought right back up, just like right here when Microsoft was falling below this red line I have, the support line. See how it came down, but it got bought right back up? Well, the bottom line is if we get a clean break where we don't get bought up too fast and we start breaking to 265, we're likely going to crash to 263 and fill the gap. But there's also this gap up here. I think tomorrow, either Microsoft is going to try to fill this gap first and then start coming down, or it might come down, chop around a lot, and it might end up going for this gap fill over the next couple of days. I do think that's going to happen. But once again, we have to be prepared for anything. I am still a little bit more short on the Microsoft side. For Aapl, if we're bullish, there's 157, break above that, then there's 160. Uh, if we're bearish, watch 154, 152, then 150. All right, what do I think is going to happen? We're still kind of in this zone where we're going back and forth and back and forth. There's no guarantee we're going to break out of this. We do have a bullish structure. It might try to touch 157, then come right back down and just trade a little bit sideways throughout the day. And I think we might get a pretty flat close, maybe a little bit in the red for Aapl. And then I do think things will change by the time we get to Friday. For the triple Q, and what else is interesting is the market closed somewhat green. The VIX came down kind of hard. It's still at 18 flats. Very interesting. On the daily, it looks like this. So we got the break from the falling wedge and we're back inside of it. No guarantee that this is going to last, though. I don't know if the VIX is going to come down and then bounce or if it's going to bounce off like 18. Could be either one of those. Finally, I'm sorry, the QQQ, I was actually about to talk about that. Looking at the QQQ, this is looking like an accumulation. The question is this forming a distribution? I don't really know for sure. It is a possibility. Um, what else I'm saying is it has potential. If it breaks 309, we could try to get to 311, but it's been getting rejected in these zones many times, so I'm not sure if it's going to get the big breakout. It might trade a little sideways tomorrow, maybe come down a little bit ultimately by the end of the day, getting closer to 305. But like I said before, I just see a lot of sideways action. If we're bullish on this thing could first off break. The next major level of resistance is around this 311 area, 311 point, about 311. If we break this 311, it's going to fly to about 314. Now, I can't guarantee it's going to do that. If it does do that, then we have 319. I don't really think it's going to get that high. Depends on Apple and Tesla, but there is this 314 area, very close to it. Specifically, 313.68 to 314 is where the zone happens to be as resistance. For support, don't forget to watch this 305, then 300, then the 297 area, because that's where the daily 20 moving average is. My prediction, though, is we're going to get a pop. We might gap down first and pop up and try to fight for 311, trade sideways, and then fail and start slowing down as the day goes on. And we might see this thing slowly come down to 309, maybe breaks a little bit below that and closes a little bit on the red side. That would be completely normal. Finally, the dollar is still breaking out. We actually had 104 today. Typically, the market should be coming down when this ends up happening. And on top of that, I want to note that the 10-year Treasury yield is still continuing to push up. The bonds market is pricing in a more hawkish Fed. The market is continuing to defy the odds. It's very unusual. This is because of insane manipulation. But anyways, that's what I have for this video. I want to thank you all so much for listening. Have a great rest of the day, and I'll see you guys in the next one. Tomorrow is going to be a huge day, and peace out.